This is the briefing for Friday, June 3rd. I've made a comment previously in some of the briefings that the market spends most of its time in rotation, and that's basically true based on varying time frames. Now, we do know that markets run and pause in all degrees of time, so there are vertical development runs within the indices or within a stock even. But when you look at it from a greater degree time frame, you can see that the market does spend most of its time in rotation. Now, this is the spiders, the S&Ps, and this is a daily chart, and I've shown this chart before. I put these ellipses up here, and you can see the rotation that goes all the way back to November of last year, and I haven't gone back any farther, but you do get breakouts where you get a rotation, a breakout, or vertical development, then the development of another rotation, a breakout, another rotation, a breakout, and another rotation. So basically, we've been in an area of rotation. If you look at just this area here, we've been in an area of rotation since the beginning of May. I think it's May 9th was where this began. Yeah, it's May 9th. So basically, we rotated in this area here, and then we broke out and paused for the last 5 days. So for the last week, we've been in a pause just above the 410 area in the spiders. Now, this is important to recognize, is the fact that when you pause like this, and then you get a breakout pause or a breakout, typically there is a pause because most traders understand that this 410 area in the spiders is a significant key reference area. So they step back to determine whether there is enough strength in the market to break out, to continue the breakout and move prices, in this case, higher. So based on that, a breakout of this area followed by strong internals would suggest a much greater degree time frame move, which would be another rotation back through to the 460 area, which is the next upside resistance. Now, I've also pointed out in the past that this was a stair-step move down, and that it would continue until we saw the next lower high or lower low taken out. That would then suggest that a greater degree time frame counter trend rotation was in the process of developing, meaning that this is a run, this is a pause, this is a run, a pause, run, a pause. And then if you look at this as a greater degree time frame, this is a run, and this now is a greater degree time and price pause. So the question facing us is it over? And we just don't know that right now. Now, the next short-term upside resistance is going to be about the 430 area, which is this next lower high, which would be extremely important. And I would suggest a breakout of the 420 area would suggest a test of 430. Breakout of 430 would then suggest that we're going to test 460. On the contrary, we don't know whether this is complete or not. It has not developed into 3 steps, but it has developed into a rotation, and with a shorter term pause. This is a longer degree pause. This is shorter in relation to this. So a breakout to the downside would then suggest a test of the May 20th low, which comes in right around the 380 level. So there we are in terms of what's happening in terms of price development. Now, the real crux of the matter here is the fact that the internals are just absolutely terrible. Now, you can see that volume continues to fall off. This is volume in the spiders. Volume continues to fall off, although it flattens somewhat over the last couple days, and really I can't imagine that it could go much lower without just a complete halt to the trading in it. And breadth is declining. As you can see, we've got a divergence in breadth as it has declined. This is a higher high over this, and this is where breadth was in yesterday's trading. So we've got a divergence there as well. New 52-week highs minus 52-week lows is negative, although it's only negative 71 shares, so that suggests that it's really, I would say, neutral. Now, What's important here now is going forward is going to be 420. Breaking out of 420 is going to suggest a test of 430. Breaking 430 is going to suggest a test of 460. Breaking below 410 and actually breaking below this low about 407 would suggest then rotation back through this range. So those are the key reference areas for the spiders. Those are extremely important areas. And keep in mind, when I talk about a breakout, now you can see we had a breakout yesterday in the spiders, but it was not followed by stronger breadth. It was followed by weaker breadth, and you can see the divergence. That's why in these briefings I warn on a breakout to the upside or even to the downside that market breadth should be at least as strong as the previous day or days, whether it's to the upside or to the downside. Now, looking at where we are in the NASDAQ, you can see I didn't do the ellipses here. You can see the rotation, and another rotation. Now, this comes in right around 310, and you can see about the last 5 days of trading, we had a attempted breakout move in yesterday's trading, but breadth was diverging, suggesting that it was not strengthening, it was weakening, and the 320 area, 318 to 320 area in the Qs is just extremely important. Breaking that would open up trading to 350. Well, I should say it should be 330, then 350, and then above that is 370. So these lower highs are the next shorter term levels of resistance. Breaking below, I guess this low is about 301. Let's call it 300. Breaking below 300 is going to suggest trading back through this range. So basically, we're at a point of decision for the indices. Either they're going to break to the upside or they're going to break to the downside. The question is, the market isn't giving us enough information to understand that. Once again, stair step lower as a run, pause. This is a run in a larger degree time frame. This is a pause in a larger degree time frame. And the question is it complete or not? And we just don't know that at this time. The internals on the moves higher are not strengthening. That gives me at least the perspective that the probability of a continuation of a move higher is less than the probability of a move lower. I think there's a higher probability we're going to move lower. Now, that can change. We know that in terms of price development, that price always corrects to the internals. But there are a minority of times that the internals will correct to support price development. That typically is around a news event. So there could be a pending news event that would break out the indices to the upside, and that would be confirmed by the internals because the determination of value has changed on the part of investors and traders, and therefore the internals increase to support price. But until that happens, I would just be very, very cautious of long positions at this time. The Russell, same situation. You can see rotation here, a breakout, and then rotation here with a pause just below the 188 area. That's the next upside. That is upside resistance for the Russell. Then above that is going to be the 196 area, and then above that is about 209 to 210. Once again, volume falling off pretty dramatically. Really just not a whole lot of volume coming into this market, driving the market in one direction or another. Now, I just made a comment about the internals correcting to support price on a news event. The opposite of that is true also. If we get bad news, or if the market determines news to be bad, then you're going to see a break to the downside, and following with that should be the internals supporting lower prices. In other words, weaker breadth, higher volume, or volume increasing. And I should make this point also. What we don't want to see on any move to the upside or downside would be an explosion of volume. That typically could be a capitulation move. What we want to see is just what we see right through here, is you want to see volume building as the trend in price starts moving. So, and you can see that here, how this move to the downside was supported by volume. You can see this move here, how it was supported by volume. So we want to watch what happens with volume very, very carefully. Now, speaking of volume, this is total volume on the NYSE, and this is total volume on the NASDAQ. Now, we had, I forget what day this was, that was the 31st. We had a spike in volume right at the close. I think that was end of month settlement with some of the mutual funds. But overall, you can see total volume is absolutely collapsing on the indices, on the NASDAQ and on the NYSE. So unless or until we see some volume increase on one direction or another, I'm just very skeptical of this market. I was asked last night whether I was long, and I basically told the individual that I was flat. And that's true. I tried a small short position today, but I didn't like the way the market was moving, so I exited that position. So right now, unless I see the internals beginning to confirm what's happening, I'm just reticent to be putting on any positions. It would be basically trying to predict where the market is going to go, and I don't like to predict. What I like to do is take information from the market, analyze that, and try to determine the higher probability of one event occurring over another. And right now, there's just not enough information coming from the market to give us that type of analysis. So for right now, unless or until we see some type of move outside of these areas of rotation, these shorter term areas of rotation, then we just really need to sit on our hands. Hopefully Monday next week we will begin to see some type of a breakout in one direction or the other, and that should provide us with the opportunity for some pretty good trading. Also keep in mind that if you're trying to trade through this is a very choppy market, and I've found that a lot of people will just get chopped up and get their accounts chopped up trying to trade that. So be patient. You can see even in the Qs, this is a 60-minute chart. You can see the pause today that occurred right at the lower extreme. So a little bit of pause here, and the spider's right in the middle of the rotation. So I would just give the market enough time and effort to give you a little more information before you make some trades. Have a great weekend, and I'll pick this back up again on Monday.